In a significant move that could reshape the landscape for foreign investment in India, regulators are actively working to simplify the entry process for overseas investors. This initiative comes at a crucial time when foreign capital inflows into the Indian economy have been notably sluggish. According to multiple sources familiar with the discussions, the Securities and Exchange Board of India, SEBI, and the Reserve Bank of India, RBI, are in the final stages of planning changes that would streamline the registration process for foreign investors. Currently, the time required to register can stretch up to 6 months, but these reforms aim to cut that down to a more competitive 30 to 60 days, aligning with international standards. This reduction in time is expected to be achieved by minimizing the amount of documentation required and easing the scrutiny on investors who are already regulated in their home countries. Interestingly, the urgency for these changes is underscored by the challenges posed by high trade tariffs from the United States, which have created a climate of uncertainty for both the economy and its financial markets. In fact, foreign investors have pulled out a staggering net amount of $10 billion from Indian equities and bonds in 2025 alone, with a marked increase in selling activity during July and August, driven by disappointing corporate earnings and ongoing tariff concerns. In an effort to gather insights and feedback, top officials from Indian regulatory bodies have engaged with over 200 global asset managers across Europe, Asia, and the U.S. in the past 5 months. This outreach aims to identify ways to enhance the accessibility of Indian markets for foreign investors. Additionally, a delegation of investors from 6 different countries recently met with officials from the RBI, SEBI, stock exchanges, and the Finance Ministry to discuss these matters further. As part of the proposed reforms, the RBI plans to harmonize its documentation requirements with those of SEBI, particularly for regulated overseas pooled funds like insurance and mutual funds, which are classified as low risk. This is a notable shift, especially considering that SEBI had already relaxed its documentation requirements for public retail funds back in 2019, bringing them in line with government-owned funds. However, the RBI has yet to implement similar relaxations. Moreover, the RBI is expected to align its norms for foreign investors wishing to open bank accounts with SEBI's registration criteria. Currently, the RBI mandates that banks conduct a risk-based assessment, which includes verifying the source of funds and confirming the identity of the investors. In a bid to further facilitate foreign investment, SEBI has recently launched a dedicated website for international investors and is contemplating the possibility of allowing them to submit their registration documents directly online. Eugenie Shen, Managing Director of the Asia Securities Industry Financial Markets Association, a group advocating for offshore investors, remarked, "Both SEBI and RBI have been exceptionally responsive and proactive this year in exploring ways to simplify the investment process for foreign investors in India." As these discussions unfold, it raises an important question. Will these changes be enough to restore confidence among foreign investors, or are there deeper issues at play that need to be addressed? What do you think? Share your thoughts in the comments below.